Well, good morning or good afternoon, depending on where you're joining us from. Welcome to today's webinar, which is going to be an Unemployment 101 training session. My name is Nicole Korn, and I'm the Director of Unemployment Insurance Solutions here at 501, and I'm going to be your presenter today. A couple of housekeeping items before we get started. There is a copy of today's presentation located in the resources section of the webinar toolbar. I do think that you get sent a copy as well after the webinar. I am going to leave everybody on mute today just to keep down any background noise or distractions, but if you have a question, feel free to type it into the Q&A box, and I'll stop periodically throughout the webinar to check that. And if for some reason we get so many questions, which does happen from time to time, and I can't get to them all, I do promise to follow up with you directly after the webinar. And then finally, if you're joining today's webinar because you're looking for some continuing HR education credits, such as SHRM or HRCI, all you need to do is fill out the survey that you'll get after the webinar, and then just give us about 24 hours or so, and they will send you the code to claim your credits. All right. So let's jump in. Let's cover the agenda first. So I'm going to start off with a little bit of a brief history about the foundations of the unemployment program so that you can understand sort of how it was built and the principles that it was formed under. Then we'll talk about chargeability and liability. Then we'll move on to different types of separations and some adjudication strategies. And then we'll wrap up with some quick tips for appeals and hearings. All right, quick history lesson. Unemployment actually began as a result of the Great Depression. So in 1929, financial institutions collapsed. Many companies had to lay off workers, and this caused the unemployment rate to skyrocket to over 20% nationwide. And so it was this event that prompted our government to find a program that could provide relief to individuals who've lost their livelihood. And so on August 14th, 1935, President Roosevelt signed the Social Security Act. And it was that contained provisions for elderly insurance, welfare, and unemployment insurance. So the U.S. unemployment program is federally mandated. However, each individual state is allowed to administer the program as they wish, so long as they meet four federal requirements. So that first federal requirement is the replacement of lost wages. And so the main objective here is to protect workers from a temporary loss of wages. And while the weekly benefit amounts do vary from state to state, unemployment is always meant to replace only a portion of a worker's earnings. So, for example, if you're employed and you make $1,000 a week and you get laid off, you're not going to receive $1,000 a week in unemployment. It's usually somewhere, between 50 to 60%, depending on your state, right? And this is in part to provide an incentive to that unemployed worker to return to the workforce. The second federal requirement is stabilization of national employment. So the objective here is to create an incentive for employers to retain their workforce by taxing them or charging them on their unemployment experience. So if you're an employer that has a high level of chargeable claims against your account, your tax rate would be much higher than a company with little unemployment activity. Now, this is obviously slightly a little bit different for nonprofit companies that are exempt from the taxes, but the underlying principle is the same. There is a financial impact for not retaining your workforce. Requirement number 3 is stabilization of national economy. So obviously, if someone has no money coming into their household, they're not spending money in the economy. So the idea is to get some money back in their pockets and retain some of the consumer purchasing power. And then last but not least, the fourth requirement is actually job placement. And this is why state unemployment agencies are the #1 job placement bureaus in America. So outside of these 4 federal requirements, each state can have its own program. Now, there are 5 criteria in order to be eligible for unemployment, and these 5 criteria are actually the same in every single state. So, in order to be eligible to collect unemployment benefits, you must be physically able to perform some kind of work. You must be available to work. So you can't be on vacation in Europe and drawing unemployment benefits. Can't be off at college full time and be drawing unemployment benefits. You have to be actively seeking work. So that's why they have job search requirements and you have to report the jobs that you've looked for, those sorts of things. You have to meet the state's monetary requirements. So first, you had to have worked long enough and earned enough money to be eligible. And then on top of that, if you're filing for partial benefits, right, and you're still earning some money, you have to be below a certain threshold. So there are monetary requirements. And then last but not least, you have to be unemployed through no fault of your own. And this is the one that's really tricky, highly subjective, and we'll talk more about this when we get to the different types of separations. So unemployment really hadn't changed much since 1935, if you can believe that. That was until President Obama passed the Trade Adjustment Assistance Extension Act of 2011. This was major legislation that resulted in new regulations to try to promote unemployment insurance integrity. These new regulations went into effect in 2014 and changed the way that employers need to view their role in the process. So previously, employers made a choice between responding or not responding to unemployment claims and would often only respond if their wish was to have benefits denied. But moving forward, employers are actually required to respond to all claims in order to remain in compliance and avoid potential financial penalties. This federal legislation stipulated that the state unemployment agencies must prohibit relieving an employer of unemployment charges when both of the following conditions exist. So the first one is that the unemployment benefits were paid improperly due to a failure of the employer to respond timely or adequately to the state's request for information. And the second one is that the employer has established a pattern of doing this. So a pattern of not responding timely and adequately. So what does this mean exactly? Well, prior to 2014, employers could just send a very generic response to an unemployment claim. And if the person was awarded benefits, they could appeal it and then put in a lot more effort to gather all the details and the supporting documents for the hearing. And then if they were successful in getting the decision overturned at the hearing, the state would then owe the money back that had already been paid out to the employer, regardless of any fault the employer may have had in the state making an incorrect initial decision. So post 2014, states are now required to deny reimbursement of those improper payments if the employer has a pattern of doing this. They may stop paying benefits as of the hearing decision. So if you get it overturned and you get a favorable hearing decision, they may cease paying benefits, but you won't get any of the money back that had already been paid out. Now, these rules are actually beneficial for all parties involved. So if you provide the necessary details and the documentation up front, the state will make better initial decisions, which then results in less appeals and hearings for both you and the claimant. And the states are less likely to, become insolvent because there will be less improper payments being made. So think about it like this. An individual could collect thousands of dollars by the time a claim gets to the hearing, right? So they're awarded initially, they start collecting, and then you appeal it. And, between that first, decision and the hearing, they could have collected thousands of dollars. So if you wait till the hearing to now provide all the necessary information that would have initially disqualified the person, the state now has to try to go back and collect that money from someone who is currently unemployed. And in most states, the employer doesn't get their money back until the state recoups it. Now, there's a few states that do it right away, but in most cases, you don't. I've seen it take 5 to 7 years for credits to start coming back from those unemployment overpayments. And sometimes the state will end up waiving those overpayments due to hardship. So it really is in your best interest to respond with all the information upfront at that initial claim level. That way, the state can apply the laws appropriately and make better decisions. Okay, so unemployment claims are 100% financed by employers. either through taxes or direct reimbursement. It's not uncommon for people to believe that, they pay into unemployment and it's a benefit or an entitlement that they're owed if they lose their job, but this is not the case at all. There are 3 states that do require a small employee contribution. Those states are New Jersey, Pennsylvania, and Alaska. And so the employee might see a little bit, like a little tax on their paycheck. However, those taxes that they're charging the employee actually go to the state for the cost of administering the unemployment program, and they do not contribute to the funding of the unemployment benefits. They're 100% paid by the employer. So when it comes to funding benefits, there's 2 types of employers. You could be a merit-rated employer, also known as tax-paying, or you could be a reimbursing employer, also known as self-insured. So merit-rated employers could be a for-profit or a nonprofit employer. They're going to be issued a tax rate every year in each state that they operate in, and it varies greatly by state. The rate is then applied to a taxable wage base, again, that varies greatly by state. And that's what they have to pay every single year. So let me give you an example. So in the state of Oregon, the taxable wage base is currently $56,700. And you could be assigned a rate up to 5.4%. So let's just say you're assigned a rate of 4% this year. That means you're going to pay 4% on the first $56,700 that every employee earns. So if you've got 100 employees, that's roughly $22.68 per employee. If you've got 100 employees, that's $226,800 that you're going to send to the state every year in taxes, regardless of whether you've had any unemployment activity, right? And if you don't use it, you don't get that money back. And when determining your tax rate each year, there are a lot of socialized costs and fees that go into that rate. So it's not just determined by your own unemployment usage. So you could be doing great, but if other employers in your state are not, your rates could go up due to that. So like post-pandemic, the states were all raising wage bases and rates. And even if you didn't have a lot of claims during the pandemic, the funds were drained. And so the states will pass legislation to make rates higher in order to refund that system. Not to mention, when they determine your rate, most states use like a 3 to 5 year look back period. So you got one bad year, and that could affect you for many years after. Now, the other type of employer, which should apply to everybody on the call today, is reimbursing, right? And in order to be self-insured or reimbursing, you have to be either a 501c3, a nonprofit organization, a government agency, or a tribal organization. Being a reimburser can be particularly advantageous for many employers for several reasons. You're going to pay for actual benefit payments issued. That's all you're going to pay for. You're going to reimburse the state directly, dollar for dollar, only for the benefits actually paid out. So you will avoid increased tax liability due to an unfavorable economy, and you'll avoid some of those tax assessments and socialized costs. So using sort of that same Oregon example, you have 100 employees, you're in the state of Oregon. Now, let's say you're self-insured and you're reimbursing, and you do a pretty good job of managing your employee turnover. So maybe you only separated 10 people throughout the year, and maybe only 4 of them are eligible because the other ones either voluntarily quit, or maybe it was misconduct or a discharge of some nature. So maybe only 4 are eligible. Well, the average claim value, as posted by the Federal Department of Labor in the state of Oregon, is about $8,400. Now, obviously, some are going to collect more and some will collect less, but the average is about $8,400, right? So if you had 4 people eligible that year, that means you're going to pay around $33,600 to reimburse those benefits versus that $226,800 that you would have paid in taxes. So that's just a way to kind of compare the reimbursing model versus the tax-paying model. And obviously, reimbursing isn't right for everyone. It depends on your turnover and your payroll size. And of course, a lot of things go into that, making that decision. All right, so I think it's really interesting that most studies that attempt to quantify the cost of turnover rarely ever consider the cost of an unemployment claim, but they should. It's a very real cost, and it directly impacts your bottom line. Most formulas, it's just the cost of turnover equals the cost of hiring plus the cost of training. So they never include that unemployment expense. So I like this chart because it kind of just gives you a quick snapshot of how much unemployment can cost you by state. It varies greatly. But like, just look at the state of Washington. The maximum weekly benefit amount in the state of Washington is $1,152. So one claim in the state of Washington, if you had a high wage earner that qualified for that, and then they collected the full 26 weeks, could cost you almost $30,000, right? So it is important to pay attention to unemployment. It is a real cost and it is somewhat controllable. And we're going to talk about ways that you can manage some of that expense when we get to some of the adjudication strategies. All right, so let's talk about determining chargeability and liability, and then I'll check the questions queue. So so the first thing that the state is going to do is establish something we call the base period. And, one of the most common questions we hear is, why am I responsible for this claim and how much am I going to have to pay, right? So when someone files a claim in every single state, the state is going to say, okay, what is the base period? And in general, the base period in most states is going to be the first four of the last five completed quarters. There's a couple exceptions that do it weird. Massachusetts and Minnesota, I know, use the last four completed quarters. But every other state, it's the first four of the last five completed quarters. Okay. So if you're looking at this chart here to the right side of the screen, this kind of shows you how to figure out what the base period is. So right now we're in the month of February. It's not a completed quarter, right? So if they were to file a claim today, so look at that top right white unshaded box that says January, February, March. That's the filing quarter. So if they file in February today, their base period is actually going to be October of 2024 through September of 2025. So it's the first four of the last five completed quarters. So last quarter, which is a completed quarter, so Q4, is actually going to be called what we call the lag quarter. And there's a very good explanation for why the states do that. Every employer has roughly 30 days at the end of each quarter to report your wages to the unemployment offices, right? So your payroll company is reporting those things quarterly. In states like Minnesota and Massachusetts, if someone files really early in the quarter, so say someone files in January, the state won't have their Q4 wages yet. And they're attempting to include that in the base period because they use the last four quarters. So without allowing that lag quarter to give time for employers to submit it, well, in states like Massachusetts and Minnesota, the state has to send them this very cumbersome wage questionnaire. And it creates a lot of extra work. So even though it seems a little strange to use the first four of the last five, there's a really good reason why they do that. So what's the point of the base period? So once they establish what this person's base period is for the claim, that base period is going to tell them lots of things. It's going to give them all the information they need most of the information they're going to need for how to process eligibility financially, right? So first, it's going to tell them, has the claimant met the minimum wage requirement? So they're going to look at all the wages that this person earned during the base period. Then it's going to tell them how much is the claimant eligible to collect and for how long. So again, based on the wages this person has earned from all their employers in the base period, that will tell the state how much they're eligible to collect. It's usually roughly, again, 50 to 60% of their average weekly wage up to whatever the cap or the max is in your state. So they use the base period to determine that. It's also going to tell them which employers will receive a claim and what type of claim they'll receive. And it's also going to tell them if the claimant is found eligible for benefits, how much is each of those employers going to pay? So let's walk through a specific example of how this works. Okay, so in looking at this graphic, it's just a different way of looking at the base period here. You'll see that there are three companies involved in this claim, right? This person files the claim, and if you look down sort of on that bottom part of the box, you'll see we've got company A, we've got company B, and we've got company C. So on this claim, based on the date that the person filed, the lag quarter, and then the base period, company A is going to be both the last employer and also a base period employer. Okay. Company B is going to be a base period employer only, and company C is also going to be a base period employer only. So company A is going to receive a last employer claim, and it's this claim that is used to determine the eligibility for their claim based on their most recent separation. So only the separation from company A matters on this claim because that's the separation that prompted them to file. They didn't file when they left company C or company B. They didn't file till after their separation from company A. Okay. Now, company A will also receive a base period notice because they have wages. You can see that their period of employment for company A extends just a little bit back before the lag period into the base period. So that means that they're going to have some financial liability on the claim in a proportional state. They're going to have some liability. So they're also going to receive a base period notice, which addresses their financial liability. Now, company B and C, they're only going to receive a base period notice, letting them know that they have liability and that they'll be charged their share if the claimant is found eligible based on their reason for separation from their most recent employer. Base period claims, so meaning if your company B or C, in most states, you can't protest those claims if you're not the last employer. There's a few state exceptions, which I've included on a latter slide here so that you have that list. But in most cases, they don't. And the reason for that is because we talked earlier about the taxpayers and how they pay a lot of socialized fees and pooled money there. So in this scenario, if your company C and you pay taxes and that person quit your organization and shouldn't technically be eligible for unemployment against you, but a year later they get separated for a layoff and they file a claim and you're sort of in that look back chargeable period. If you're a taxpayer, you can say, no, don't count this claim against my experience rating because they quit, and the state will allow that for a taxpayer. They're still going to pay the claimant the same amount. They'll just take your portion out of that pooled expense, right? Which ultimately then will still raise taxes. But that's why you can technically, we'll say, protest a claim if you're a taxpayer, because they'll take that money out of that pooled fund. Now, if you're a nonprofit and you don't pay into that pooled fund and you're only reimbursing, there's nothing for that, nowhere for that money to come from. And so you have to pay your portion. Sometimes this works in your favor and sometimes it doesn't, right? Like maybe you're company A and you separated them so quickly that you don't have any wages in the base period. It's going to be all their prior employers that pay the claim and not you. So, it kind of works both ways. Now, this example that I'm showing you here, this is a proportionate example. So not every state does it the same way, unfortunately. It'd be nice if they did, but 36 out of the 50 do it proportionally. So that's why I use that as the example here. Now, you can see that in this example, company A and company B and company C, the total wages from these three employers during the base period in this example is $50,000. Okay. And in this example, company A paid 5,000 or 10% of that 50,000 in the base period. Company B paid 20% or 20,000 or 40%. And then company C paid 25,000 of the 50,000 or 50%. So proportionately, they will each pay their portion. If the person's found eligible. So if they're laid off from company A and they're found eligible, company A is going to pay $48 a week of their $480 unemployment benefit. Company B is going to pay $192 a week, and company C is going to pay $240. And again, I know that may not seem totally fair. That's the way they do it. Now, there are other states that do it differently, and I would even argue probably more fairly. For example, states like Illinois, they charge the last 30-day employer 100% of the benefits. Now, for nonprofits, They only charge you 100% if you also had wages in the base period. So in this example, company A, they're the last employer. They've worked obviously more than 30 days there, and they have wages in the base period. They would be responsible for 100% of the claim, and company B and company C would be charged nothing. Okay, so if you're in a state that does it that way, that's how they would do it. Now, if company A didn't have wages in the base period and they were in a state like Illinois, company A would pay 50% and then the state would somehow cover the other 50%. That's how they do it. And there's one other charging method, which is called inverse chronological order. States like Massachusetts and I believe Iowa do it that way. Whereas, and again, this one even seems more fair than the proportionate. But basically, what they do is they would still determine the amount of liability for each employer, but they would start charging company A first. And then when their max liability runs out, if the person's still unemployed, then they move on to charging company B. And then if they max out their liability, then they would move on to company C. So those are the three types of employer charging methods. But again, the majority do it like this proportionately. All right, so I did mention there were some exceptions to base period protests for nonprofits. So in certain states, like you can see here, Colorado, Iowa, Michigan, you can protest base period claims when you're a nonprofit. So they do that. There are some states that have other provisions, like Pennsylvania here. They have something called a solvency fee. And what that means is every year they send out a notice toward the end of the year around October, November, and they say, here's a one-time fee that you can pay that will give you the right to protest some of those base period claims. It's like basically pooling funds or paying into like a one-time slush fund that will sort of socialize and pay those fees for those individuals. So you could choose, you have to evaluate each year, right? And we can help you do that if you reach out to us, but we can help you evaluate if it makes sense to pay that or not. A lot of times it doesn't make sense because it would have to be a protestable claim anyways, right? So anyways, I'm not going to go through all these states and the individual exceptions. This is meant to be a very an unemployment 101 overview. So we certainly can't go through all 50 states, but you'll have a copy of these slides. You can look through these different states here and see if one of these exceptions applies to you. And you can also ask us. We're happy to answer those questions. All right. So before we move on, I'm going to check the questions box and just see if we've got any questions. All right. Q&A. Oh, no questions so far. Wonderful. Okay, so now we're going to move on. We're going to start talking about the types of separations, some adjudication strategies, effective documentation, and all of that so that we can try to control the claims that we can, right? Really what we're going to do is focus on best practices for how to win the claim before it's ever filed, right? So once someone leaves your organization, it's too late to go back and get all that documentation that you should have been doing during the employment process, right? So the goal here is to kind of talk about what kind of details you should be documenting, right? What kind of coachings and what are you going to need if and when that person separates in order to effectively protest a claim should it need to be protested. Unemployment is not black and white, so I really want to stress that. And it's very, very gray. So we're going to have to kind of get into the details about what the state is looking for and sort of what would shift their decision one way or another given a particular circumstance, right? So first, let's start off here. There are only 3 types of job separations that are recognized in unemployment adjudications. And every separation is going to fall into one of these 3 categories, okay? Once the state determines which one of these categories it falls into, that will then dictate the flow of how the claim is adjudicated and who has the burden of proof, whether it's the employer or the claimant. So the state is going to determine which one of these categories the claim falls into by looking at things such as who was the moving party that initiated separation, and was continuing work available, right? So we have the obvious ones that we all know fall into these categories. So, like for a discharge, we know that if you terminate someone for a violation of policy or performance or misconduct, what have you, we all know that that's a discharge, right? But the ones that may surprise you that are going to be called a discharge are suspensions. So even though you haven't actually fired the person and they still technically are employed, it's going to be adjudicated as a discharge because you, as the employer, were the moving party, right? Mutual agreement. So it's just not working out. Let's just agree to part ways, kind of a thing, or I'm just going to let you quit, but really I'd fire you if you weren't quitting. That will be adjudicated. It doesn't matter what you code it as in your HR system. It will be adjudicated as a discharge. Okay. Voluntary separation. So obviously if someone quits and just abandons their job, we all know that those are voluntary. But leave of absences, those are going to be adjudicated as a voluntary quit because the employee typically is going to be the one initiating that separation, and therefore it falls under voluntary quit provisions. And then the burden of proof is on the claimant. Lack of work. We all know if someone's laid off, their position's eliminated, you have to reduce staff or whatever. We all know that those are lack of works. But the ones that confuse a lot of people are part-time, that where your hours fluctuate can be considered a lack of work. Any sort of reduction in hours, temporary or seasonal work. So like summer camps or temp jobs, contract assignments, uh, like substitute teachers, all of that is going to fall under lack of work. So we will dive more into each of these categories. So first we're going to talk about discharges. And as I mentioned, this is probably the more complicated one. Um, the details really do matter. And the burden of proof is going to be on the employer. Okay. The employer is going to have to prove that the employee was separated um, due to misconduct. Okay. And every state generally defines misconduct as a deliberate and willful disregard of an employer's interests or repeated violations of a known company policy. So keep in mind, it is very possible for an employee to be discharged for cause, and it still not meet the state's definition of misconduct. So in essence, you could have made a perfectly good business decision, followed all your policies, and separated that employee per the book, and yet they might still qualify for unemployment. Okay, so what I want to do is I want to walk through some of the discharges that are going to be a little trickier and kind of explain to you what the state is looking for and why some of these are a little bit more hard to win when you discharge someone. So the first example is going to be of something that generally is not considered misconduct, is going to be an isolated incident. Okay, so what this usually means is that the individual might have been terminated for some sort of a policy violation, but they either had no prior warnings or they had no prior warnings for a similar infraction. So usually, unless it's gross misconduct, like means for immediate discharge, the state is generally going to want to see at least one documented prior warning for a similar issue. So even if it was just a verbal warning and you documented when and how that conversation took place, that is still valid, but you need to have at least one prior warning generally. Right? So where we typically see employers run into challenges with this is if you have a progressive discipline policy, kind of like a three strikes, you get three strikes and on the fourth strike you're out kind of a thing, regardless of whether those things are related or not. So let's just say you have a policy like that, which is very common, but it's a mixed bag of warnings that you've received, right? So maybe you had two warnings for attendance, and then maybe you had a final warning for, I don't know, a dress code violation, and then maybe the final incident that resulted in um, termination was, I don't know, violation of your social media policy or computer online policy or something to that effect, right? That would be considered a mixed bag. And since that final incident wasn't gross misconduct, um, a lot of times the state will rule that as an isolated incident of poor judgment, meaning, yes, they broke a rule, but they couldn't have reasonably known that that might result in their termination. And so, like I said, generally they're going to want at least one prior warning. Not a whole lot you can do about that. You have to follow your policies, but just want you to understand that that could happen if they haven't had at least one prior warning. Another one that comes up a lot is what we would call a good faith error. So in general, this is when the employee is doing something that they felt was in the company's best interest. They could have had prior, I have here listed no prior warnings, but they could have even had prior warnings. Um, but it would all come down to really what happened. So I used to manage claims for a very large, popular retailer that we would all know back in my early career. And this was a really common one was meal break violations. So for hourly employees, I mean, this company was highly, sensitive to risk, and they had to follow the laws pretty closely. They didn't want to get lawsuits, penalties, that sort of thing. So they had very strict meal break policies for hourly employees. So you were required to take a meal break, after so many hours, et cetera. And we would see violations of this all the time. And so where we would run into challenges is, if that employee, say, their reasoning for violating that policy was, well, we were shorthanded that day. I was the only cashier that was checking customers out. The line was all the way down the other aisle. I couldn't walk away because for the good of the company, I needed to be at the register checking out customers, right? So even if they had been warned a million times for that, they're not doing anything to purposefully hurt you. They were doing what they thought was in the best interest of the company. And so even though the employer had to terminate them because that's what the policy says, the state is usually going to award them unemployment because it was a good faith error. Now, let's flip that in a different scenario. So let's say this same person had been warned a couple times about this, and their supervisor had given them strategies for how to manage a scenario like that. And it said, you're required to take your meal breaks. If there's ever a situation where you feel like, you can't walk away, what have you, here's what you should do, XYZ. Maybe it's you should call your supervisor up to the register and let them take over for you. Or maybe it's, you know, um, call another coworker. I mean, I don't know what it would be, right? It would be company specific. But if they gave this employee strategies for what to do in that scenario and said, now, if you violate this again and you don't follow these strategies, you're going to be terminated, and then they do it again, well, that's different, right? That would be or could be misconduct. So this is why all of the details matter, because it can shift one way or another depending on, um, you know, intent. The next one is attendance, which is a super frustrating one for employers, I know, because we need people to show up for work, or we can't run a business. People have to be at work. Um, but generally, it does again vary a little bit by state, but generally, it's going to come down to that final absence. And if it was not within the employee's control, the state is usually going to say that there was no misconduct. So if someone is sick or their child is sick and they followed the policy, they called in, they properly reported it, they told you they were sick, or their child was sick, or what have you, a lot of states are not going to count that as misconduct because it doesn't matter how many times they've been absent. If you're sick, you're sick. People cannot control when they get sick or if their child is sick, that sort of thing. But there is a lot of gray area here. And what you're really looking for is, was there a policy that should have been followed and was violated, knowingly violated, right? So maybe you have a habitual a person who has habitual attendance issues, right? And they know that the policy is you're required to call in, at least 30 minutes before the start of your shift, and maybe you're supposed to talk to your direct supervisor. And they didn't call in until 2 hours after their day started, and or maybe they just texted a coworker and said, "Hey, can you let Bob know I'm not going to be in today?" Right? I mean, those are loose examples, but that would be a policy violation, right? And that would be within their control. So maybe they can't control if they're sick, but they can control if they follow your policy, if they follow your policy for properly reporting it, right? Same with like, okay, if you're out so many days, we require a doctor's note, or because you've had so many absences, we would require a doctor's note. Those types of things will help you. But then make sure that when you protest the claim, you need to include that policy violation detail, not just they were fired for attendance, they had a bajillion absences, and they're going to want to know what the final absences was. Okay, they were sick. Well, you're probably not going to win that in a lot of states, right? So you'd have to focus then. Okay, yes, they were sick. However, they failed to follow the policy and did not properly report the absence, right? Or maybe it was something within their control. Maybe you've got somebody who's always tardy, and they said they overslept, or they took a bunch of cough medicine and they were so drowsy they couldn't get up, or maybe I don't know, a number of things could cause somebody to be late for work, right? It's important to document the reasons that they give you, because if they are things that are within a person's control, like getting up on time and things of that nature, again, you're going to have a much, much better chance than if they just simply were sick, properly reported it, etc. The last thing I'll say about attendance is this is the best way to handle that. Okay. Document all the reasons that someone gives you for not coming to work. Make sure you follow your attendance policy. Make sure that you uniformly enforce it, all policies, right? Sometimes we think that the state would, see that we were like so gracious and we gave them so many extra chances. So say your policy says after, 10 absences in 6 months, you're terminated, and maybe you gave them 15 because you're just really generous. And you would think like, look, state representative, look how generous we were. We even gave them 5 extra chances. That will actually hurt you in an unemployment case, because if you are not following your own policy, then the employee, how are they supposed to know what's expected of them, or what the policy is, right? You must follow your policies. That will benefit you more times than not. So just make sure you follow your policies. And again, if uh, submit all that information to the state at the initial claim, provide those warnings, provide the reasons for the fine, for the absences, provide your policy. Um, and then when the decision comes back, if there's nothing in conflict, right, that the facts are outlined correctly, and the state says, we acknowledge they broke the policy because they had a million absences, but they were sick and they couldn't control that, so it's no misconduct. If the facts align there, it's time to let it go. Do not appeal that to an unemployment hearing, because you will not change the state's definition of what is considered misconduct. Now, if the facts are in confliction, right, because you got the claimant giving them a story and you're giving them a story, and the decision comes back and you're like, wait a minute, that's not what happened, and you think there was misconduct, well, then absolutely appeal it. So that's how I would recommend handling attendance cases, right? Give all the info up front, let the state make the decision, because it is really gray. And then when it comes back, you can determine, okay, is this really something that we need to appeal, or do we need to let it go at this point? The last one on the slide here, and it's going to get a slide of its own, is poor performance, or better known as lack of ability. So when we talk about unsatisfactory performance and how to figure out whether or not you're going to get a disqualification, it kind of comes down to, not kind of, it does come down to wouldn't versus couldn't. So they wouldn't do the job, that's protestable, or they couldn't do the job, non-protestable. Okay. So the state feels that it is an employer's responsibility to hire qualified people for the job, to properly screen individuals during the interviewing process, and to hire qualified individuals that can meet the skills of the position. Okay? If you hire someone and from day one, they have never met your expectations, that is inability to perform the job, and you will not win that case. Okay? You made a bad hiring decision, and they will collect unemployment. Okay. Now, if someone has worked for you for 3 years and for the first 2 years, they've, had job performance appraisals and they've met your expectations and they were doing the job, so they have the skills because they have met your expectations in the past. And now, for whatever reason, they are choosing not to, right? That's what you're going to show. They're choosing not to meet our expectations at this point because they've already previously proven that they can meet our expectations. In those cases, I would actually argue don't even use the word performance. Please, here's what happens, okay? Employers use the terminology of unsatisfactory performance as this like catch-all overarching umbrella code. They don't know what to put, so everything falls under unsatisfactory work performance. Or maybe your HRIS system just doesn't have a lot of specific codes. And so unsatisfactory work performance just is the best fit. That's okay. That's totally fine. The state doesn't care what you put in your HRIS system or the code that's used internally. They care about the details. Okay. So if it is deliberate performance issues, go about it a different way. I would actually say that if you can find a policy that they did violate, focus on that. So, if the final incident that caused you to terminate them violated some sort of policy, go that route no matter what the code is in your HRIS system. Focus on that policy violation. And Also, if for whatever reason you can't maybe connect it directly to a policy, it was just sort of, you know, you know what I mean, just like general like lack of effort, lack of performance, and you really don't have a direct policy you can point to, then you could call it performance, but use another term to go in front of that. So like in the Shield system, the portal where you guys fill out your claim responses, there is an option for deliberate unsatisfactory performance, which then sort of shifts the state's minds. Because I can tell you, as soon as the state sees unsatisfactory performance, right, they immediately close their mind and open the checkbook and they start writing out checks. So you've got to be very specific about the key terminology that you use when responding to an unemployment claim. So let me give you an example to illustrate the difference on a claim where in one scenario it might be considered inability to perform job, no misconduct versus misconduct. Okay. Say that you hire somebody and part of their job requires them to drive a company owned vehicle. And you have a policy stating that if they get into a certain number of vehicle accidents, that would result in termination. Well, I can tell you that it doesn't matter how many car accidents or how many other cars this person hit. You're probably not going to get a misconduct disqualification. You hired somebody to drive a car who's not a very good driver. Okay. You can't ever prove that somebody's just out there road raging and purposefully driving into the back of other vehicles, right? They're just not a good driver. Now, on the flip side, if that person was texting and driving, talking on the phone while they're driving, which if your policy says not to be doing that, right? Maybe they say, oh, I fell asleep at the wheel. I had such a bad cold and I took Benadryl and it made them drowsy and they fell asleep. In that situation, right, you would want to focus on the policy they violated that caused the car accident, not the fact that they're a bad driver. Okay. The fact that they've wrecked this car 3 times sounds more important, but it's not because they're just not a good driver and they just had accidents. The entire word accident implies that it wasn't on purpose, right? So if you can prove that they were doing something negligent that caused the accident, now you have misconduct. So that is why every detail matters and why you really need to focus on what was the underlying issue that resulted in us terminating that person. And I kind of already mentioned this, but I want to again reiterate that key terms are just so important with unemployment protests. They matter. The words you use matter because the individuals on the other end at the state that are adjudicating these claims, they're just an average person. They're not lawyers and law professionals. They're just looking at a manual that says if these conditions apply, award benefits, and if these conditions apply, deny benefits, right? And so they're going to be looking at those key terms to help them decide whether something was misconduct or not. And I'm going to give a really good example of this that I ran into years ago. So another customer that we had years ago that I had, they had a call center and they had a corresponding call avoidance policy for those call center employees, right? Because their entire job was customer service, picking up the phone, taking incoming customer service calls. And so they had a policy about call avoidance. If you were not picking up the phone, if you were not doing your job, essentially, you could be terminated for that. And you would go through a coaching process and ultimately be terminated if you were found to be in violation of that policy. Well, we had an individual who was terminated under that policy. And initially, the employer won the claim. The state denied them for the violation of the policy, but the claimant appealed it, and it went to an unemployment hearing. And when we got the decision back from the hearing, the state overturned it in the claimant's favor, and they put in the hearing decision, by the employer's own admission, the claimant's quote mistake was staying away from the phone too long. So all of a sudden now, because they use the word mistake, it turned from Billy is deliberately not doing his job and avoiding incoming calls to oopsie, Billy stayed away from the phone too long. He got distracted and made an oopsie, right? So it seems so trivial and a little bit silly, but it's true. Those words that you use in your unemployment protest matter. So think about what your end goal is. Are you trying to show misconduct? Or are you trying not to show misconduct? And make sure you use the appropriate verbiage to reflect whatever your intention is. The last thing I'll say about poor performance is, and I'm not going to tell you how to run your business, but my suggestion or advice would be if you hire somebody who is not working out, right? You can tell right away that they're not going to have the skills or the capabilities to manage the position. It's best to separate them as quickly as possible because we talked about how liability gets determined earlier. And if you separate them quick enough, you might not even have wages in that base period. You might not even be a chargeable employer. And even if you are, if you separate them in the first 90 days, you're going to have very little liability especially if you're in one of those proportionate states. So it really does reduce your unemployment liability to not sort of let that mismatch linger on, right? And then, of course, you're also going to be able to replace them with somebody who can hopefully perform the job better. And so really, if you think about it, it's just a good idea. So what kind of documentation do you need? We talked earlier about that it's actually the law now that you have to supply the appropriate information to be in compliance so that if you do go to a hearing, the state will find that you are in compliance and they won't penalize you and not let you get your money back, right? So you want to make sure that you're always supplying appropriate documentation for a discharge because the burden of proof is on you to prove misconduct. So I don't have dates of employment listed on here because that's just a give me every single claim. You need the dates of employment. Okay. First day worked, last day worked. Date of termination, if different than last day worked. Okay. So that's for every claim. But on top of that, what you're going to need for a discharge specifically, and I would actually argue that it goes in this order. First, you need the details, the date and the details of the final incident. So what date did that occur on? What happened? And it should be very specific, not general. Don't, say employee was insubordinate. Not good enough. How was the employee insubordinate? What did they do? What did they say? what happened. You need to give all of the details specific to the final incident. And remember that the final incident needs to only be that one incident that triggered you to separate them. So whatever they did that you finally said, okay, enough is enough, we're terminating their employment. That is the only thing that should be included with the final detail, the incident, sorry, details of the final incident. Okay. We want to be careful about not giving a giant paragraph about everything this employee ever did from the beginning of time and how terrible they are. You need to focus just on the final incident. Also, don't include anything that happened after. So if you brought them in to tell them you were terminating them for something they did a few days ago, and they get upset and maybe they start cursing at you and they make some verbal threats, or maybe they push a chair and shove it against the wall, don't even include it. It's irrelevant. It happened after you already decided to terminate them. Okay. So I'm not saying you can't sort of include that other detail as like a side item. Just don't include it with the final incident. Be very specific about the straw that broke the camel's back. Then you're going to want to say, okay, what policy was violated on that final incident? Okay, maybe it was just a general performance policy or a general expectation of behavior, integrity policy, something like that, and that's okay. But whatever policy you think they violated, that's what you need to call out. You need to show that the employee was aware of the company policies or should have been aware. So if they signed a handbook when they got hired, or maybe they did like an online quiz with HR, however, they should have been made aware of policies you need to prove. So just in case they say, well, I didn't know that was the policy, you can say, nope, we gave you all the policies upon hire and you acknowledge that you received them, right? And then now we're going to provide all the prior corrective action and warnings. Okay, so this is where you get to show the history and what led up to this event. So you can list all the prior corrective actions and warnings that this person had been given, and that's going to show the history leading up to the final incident. So those are the things that you need for a discharge. Okay, dates and details of the final incident, copy of the policy violated, employee's acknowledgement of that policy, and then any prior warnings. You'll see that witness statements are listed here, but I would caution you to be very careful with witness statements. Anything that you send to the state is public record to the claimant. So if there is a sensitive situation and there were coworkers that wrote witness statements and you submit those, the claimant will have access to see those. And so if you're worried at all about retaliation or that former employee doing something or taking some sort of revenge against the individuals that wrote witness statements, it is really better to not provide them. Okay, it's not worth winning an unemployment claim. Even if that would be your ace in the hole, I would not provide those. If it's a manager, a lot of times employers will provide it if it was like a supervisor that wrote the statement, but usually if it was a coworker or a colleague of some kind, it's just best practice not to include that. So that would be my warning for you on that. The other thing about corrective action, make sure that you ask the employee to acknowledge the corrective actions as you're doing them. So a lot of times they'll refuse. That's okay. I would have a witness there with you, so another supervisor, because sometimes this claim can come up 15 months later and maybe you don't work there anymore, right? But you need to have a witness, someone else that was there. You can try to get the employee to acknowledge that they received the warning without signing it. So first, you can explain to them that by signing the corrective action, you're not admitting guilt or fault. You are simply acknowledging that you received said corrective action that we talked. If they still don't want to do it, you could suggest that they write, I disagree with this, and then initial it. Or I refuse to sign, or you can write refuse to sign and then ask them to initial it. So there's a lot of ways that you can sort of take a backdoor in to get them to acknowledge that they have received or had a conversation with you about the corrective action. But even if they won't sign it, that's why you have a witness present, someone else that was there that saw you give them this warning, so they can't turn around and say, I was never talked to about this. So just make sure that you're asking them to sign or acknowledge. And if they won't, always have, just always have a witness present is the best thing. Now, if it is gross misconduct, like theft, violence, something like that, that would be immediate discharge. You would not have to have prior warnings for something like that. Simply the first three items: dates and details of the final incident, copy of the policy violated, and then the employee's acknowledgement of the policy is what you would need in that scenario for gross misconduct. I see a couple questions, so let's check the queue before we move to voluntary quits. Okay, can we discharge for a violation of the harassment policy after an investigation, or is that seen as an isolated incident? That's a great question. And the answer is going to be really gray. So I would say, yes, you could terminate them after an investigation. I think it's going to depend, A, what your policy says. So does your policy say that this could be considered means for immediate discharge? Now, that doesn't always mean, again, that could mean that the state will say, yes, you should have discharged them, but because they had no prior warnings, right? I think it's going to come down to the egregiousness of it. If it was something that could be addressed and resolved by maybe moving that employee to another department or making sure those two people don't work together. If it wasn't something really bad like hate speech or like physical touching, right? So I think it would come down to the scenario, how it relates to your policy, and what if there's no prior warnings for this, and maybe it was just a misunderstanding, right? Maybe the person was just overly affectionate on some text messages or something, but once you talk to them, they're like, yeah, I'll leave this person. I will never text them again, you know? And maybe you can make the employee that reported it feel more comfortable, right? Like if there was any way around that to address it, it really wasn't that, it depends on the level of severity, I think. If there was no other way to address it and it was really egregious, then I think you could get away with calling that gross misconduct. But it's going to really depend. That's going to be a really gray one, and I wish I could give you a more distinct answer. It's really just going to come down to, was that your only option, was to terminate this individual, or could you just have maybe put them on a different floor, a different schedule, something to that effect? The next question was for, and by the way, if you do have a specific scenario that comes up, both us in the unemployment world and also our HR services team is happy to provide advice on a specific scenario. So please feel free to reach out to us. For seasonal employees, is the hire date the date that they were first hired or the hire date for the season? Well, that's a good question. It depends on whether you terminate them in between seasons. So if you have individuals that you just keep on, like you don't actually ever terminate them, you just keep them as an active employee, but they kind of go in and out of seasons, you would use the original date that they first started working for you. If you actually terminate them in between and sort of rehire them and it refreshes their hire date, then you would use that date. So it just depends on, whether you keep them on staff or whether you actually consider that to be a separate hiring engagement. All right, good questions. All right, so let's talk about voluntary quits. They're so much easier. The hard part is over. Voluntary quits, the burden of proof is going to be on the former employee to prove that they quit with good cause attributable to the employer. They're also going to have to show that they exhausted all reasonable options before making the decision to quit. Okay, so what could be considered good cause attributable to the employer? So if you change the condition of someone's employment, that could be considered good cause. So maybe you hire them to work certain hours or certain shift at a certain pay level, and for whatever reason you change that. You change the hiring agreement. That could be considered good cause. Maybe you have a bookkeeper and they work for you kind of behind the scenes doing some bookkeeping. And maybe your receptionist quits without notice and you're like, hey, bookkeeper Barb, could you maybe help us out on Mondays and Wednesdays and maybe answer the phones for us while we're looking for a new receptionist? And maybe Barb has severe anxiety about talking to people and being a receptionist, which is why she went into the world of bookkeeping, because it's just her and her spreadsheets right behind the scenes. If you force Barb to answer the phones and that was not part of her original job description, right? You leave her no other option but to quit, right? So that would be a change again in the condition of employment. Now, on the topic of harassment, since we were just talking about it, it's a good segue. Um, if there is a harassment situation or a hostile work environment and the person has well, let me rephrase that. If it's unaddressed harassment or hostile work environment. So here's the deal. Someone cannot just quit and then say, I was being harassed or it was a hostile work environment. They have to show that they reported it to you and that you did nothing to try to resolve the situation. Okay. So if there was an investigation, and you can document what was found in the investigation and that you took all good reasonable measures to make this employee that brought it up feel comfortable, that you took actions to address the situation. You don't always have to address it to their satisfaction. Okay, that's not always possible. But if you could show to the state that you took reasonable measures to make the work environment more comfortable and safer for this employee, then you're going to be better off because the state's going to say, well, they took reasonable measures to resolve this for you. Why did you still quit? Right? They made it safe for you. Why did you still quit? So it really comes down to whether or not they're making a reasonable effort to save their job. And that's why it's important to document those investigations and to also take action immediately. Don't wait. Whatever your policy says, make sure that you take immediate action and address it. Um, Continued employment must be available for it to be a quit. I mentioned this earlier. I'm going to touch on it again. Forced resignations or discharges. So totally fine for you to say, well, it's just not working out, or let's just agree to part ways. We'll allow you to resign for your employment record. We won't fire you. Um, that's all good and well. But as I mentioned, the state doesn't care what you put in your personal HR system. They care about the details. And if it comes out, you don't even try to approach that as a voluntary quit because it won't work. Uh, as soon as it comes out that that person, you were going to fire them if they hadn't voluntarily quit, it's a discharge. Okay. Continuing work was not available. So it's a discharge. Doesn't mean you can't win, but the burden of proof shifts back to you as the employer. So keep that in mind. There are also some statutory quits that will result in the payment of benefits. And I get that they're frustrating sometimes for employers because they're like, this had nothing to do with me. Why do I have to pay for this claim? They are statutory and there's just nothing that you can do about that. Some of those would be maybe one of your employees has a spouse that's in the military and they get restationed somewhere else. And so that employee has to move. They would be likely allowed to quit and file for benefits as long as they're meeting all the requirements. So they're seeking work in their new place, their new location, they're showing that they're looking for work, they're available for work, all of those things. And they also had to show that they had no option but to quit. So did they ask for remote work? Did they ask for transfer? Uh, you know, things of that nature to try to preserve the employment relationship before making the decision to quit, right? But the state is not going to penalize somebody for moving with a spouse who is serving in the armed forces, right? Um, Another one would be like domestic violence. If somebody has to flee the area very quickly because of a bad situation, a safety issue, a lot of times the state will allow them to collect, again, provided all those other things I just mentioned. Um, and there's a few others. They're very state specific. Um, some of them are very subjective. Like some states have a, a necessitous personal need or something like that. It could be like they had something very significant going on in their personal life, but provided that they, again, took all those other measures and were meeting the requirements, which again, they do have to still meet those requirements. If this compelling need or whatever it is prevents them for searching for other work, or I mean, they still have to prove that they had to quit their employment. So, but just know that there are other statutory quits that you might be on the hook for that you don't have any control over. And again, we can evaluate those as needed as they come up. But in general, it's going to be on that former employee and they're going to have the proof. So what kind of documentation do you need? There's a list here, but really you don't need a lot. In order to be in compliance with state laws and regulations. Really, all you need to provide, again, the dates of employment, that's standard, but then the reason that they gave you for quitting, right? That's it. That's all you have to provide. Now, I would recommend highly that you ask for and get and send a written letter of resignation, because a lot of times these claimants will give the state a different reason for why they are quitting than they may have told you. So if they sent a text message, a copy of that. If they sent an email, a copy of that. If they gave you a letter, a copy of that. Whatever you have showing what reason they gave you. If it was a verbal conversation, make a note of when they called, who they talked to, and what they said. Because if you have that written in the record, that's also very helpful. The other things are nice but not required, like an exit interview. Those are great because you can get have an honest conversation and get a lot of feedback in those, and they tell a lot, right? So try adding exit interviews to your standard offboarding process. Those are really good. The other thing, notice period, that does matter. So the state will usually ask if they gave notice. And did they work out their notice? So if they gave you notice, but you terminated them before their notice period is up, understand that you will pay unemployment for that notice period. Okay, so this is pretty common in certain sensitive type like jobs where people have like access to sensitive data or customers and stuff like sales. A lot of times employers will say, thank you for your 2-week notice, but your employment actually ends today. That's very common. And because they are voluntarily quitting, they'll probably be disqualified later. But a lot of times the state will let them collect for that notice period because they were willing to work another couple weeks and you did not allow them to. So something to keep in mind. Again, if there was job dissatisfaction, potential harassment concerns, anything like that, make sure that you are documenting investigations, potential resolutions. It will be very important later on. And you'll have to show that you took appropriate and reasonable action in an expeditious manner. So, but again, really all you need at the end of the day, if you're in a hurry, dates of employment, reason provided for the voluntary quit, the burden of proof will be on them. So job abandonment is one that I do want to mention real quick for quits. Know your state rules on that because most states require 3 days, 3 consecutive days of no call, no show before it's a quit. There are a couple states, New Jersey and Alabama, that require 5 days. So make sure you document and write down the days they were supposed to come and they did not call or show. Even if you mentally made the decision to terminate them after the very first no call, no show, but if they don't come back, write down the next couple of days, write down the dates, and then say they failed to call or show up for work on these consecutive days, and now it will be considered job abandonment and a quit. So then the burden of proof is on them, right? But if someone has an attendance issue and the final incident is a no call, no show, but then they come back and you fire them, that's okay. That's a discharge, right? But you could probably win that discharge case, that attendance case, because they broke the policy. They failed to call or report to work on that final incident, right? And so, yes, you'll have a burden of proof, but you could still win it. So if you want it to be a quit, if you want it to be job abandonment, write your 3 to 5 days down, depending on your state, and make sure you go about that route. And I usually suggest maybe sending a letter or an email or something that can be documented that you're saying, hey, it's been 3 days. We haven't seen or heard from you. We are effectively accepting your resignation as of X date. That's always really good to do that too, just to kind of close the loop and make sure everybody's aware of what happened. All right, let's talk about lack of work. Lack of work is the entire intent of unemployment, right? Not disqualifying. If someone is laid off, their hours are reduced, job eliminated, whatever, they're supposed to, I mean, that's what unemployment is really meant for. But let's talk about strategies for some of these other ones that could fall under lack of work. That there might be some strategies for reducing costs on some of these. Okay, so let's first talk about part-time work, because that one's always really confusing. So part-time, there's three different categories of part-time work. Okay. The state generally defines regular part-time as a worker who works less than full-time but has the same schedule every single week. So that would be somebody that you hire for, say, Monday, Wednesday, Friday, they work 9 to noon. That's their schedule. That is considered regular part-time. And in many states, those are protestable because nothing has changed from the time that you've hired them. They have the same schedule every week. Okay. But another category, which actually is probably more prevalent, is part-time works all available hours. So an employee who works less than full-time, but their hours fluctuate based on business needs, and they're not putting restrictions, right? They're not denying work or putting restrictions on the number of hours they can work. They might end up being eligible for partial benefits. So the key here is whether the employer is dictating the hour fluctuations or whether the employee has placed restrictions on their hours. Okay. So why this comes up a lot is, let's say you have somebody that works for you part-time, and they also have another primary employer. Maybe they work for you in the evenings, and maybe their primary employer lays them off. They've had a major loss in income. So of course, they're going to go file an unemployment claim. You, as an employer that pays them wages, is likely to get a claim, especially because if you're in the base period, right, you're probably going to get a claim. That doesn't mean that that person is filing against you. You don't get to pick who you file against, right? The state is going to send you a claim though, because you are a uh, employer that's party to the claim because you pay this person. So what the state is going to do is they're going to look at this person's average weekly wage while they were working all their hours, right? Everything that was reported in the base period. They're going to come up with whatever their benefit amount was. So like, let's use that example from earlier. Say it comes out to be $480 a week. This person is going to be legally required to report all wages that they are getting from their part-time job. And then the state, if their wages fall below a certain level based on their weekly benefit amount for employment, now remember, their weekly benefit amount is only supposed to represent about 50% of what they normally make, average weekly wage, et cetera. If those part-time hours that they're currently working fall below that weekly benefit amount or some degree of that, the state might allow them to collect partial benefits. And unfortunately, every employer that is considered chargeable on the claim will pay their portion, even if that person is still working for you. The only way around that is to offer them more hours. If you offer them more hours, they will make too much money and they won't be eligible that week. Or you offer them more hours and they refuse those hours, and you can report that. And when you report that refusal, that means they're not available for all work, or they're restricting their work, and then they would be probably disqualified that week or for many weeks for not being available for work. So that's really the only way you can control that scenario. If someone had a primary job and they lose it and they're working for you part-time, if you find that out and you see they filed a claim, if you have more hours to offer them, offer them. Get them working more hours in the interim, or if they refuse, report it. Those are the ways that you can sort of manage that. Now, if this person only works for you and they don't have another employer and they just feel like they're not getting enough hours and they file a claim, you got to remember it's going to be based on like 50% of their average weekly wage. So as long as they're working something and they've only ever worked part-time, their weekly benefit amount is likely not going to be above like what they're making. So people may file. It doesn't mean they're always going to collect, but just know the only way around that is to continue to offer them more hours, because if the state sees fluctuations in hours, they're going to consider it to be a lack of work claim. But then they're going to look at the monetary eligibility. So now on-call or casual workers, so like assignment-based workers, so maybe substitute teachers, in-home care workers, things of that nature. Those are people who just work as needed, right? They might even work full time sometimes, but then other times they may not work at all. They've got no regular schedule. Again, when their assignment is over, that is a lack of work. If there's not an immediate assignment available to them, it is a lack of work. However, if an assignment becomes available and you offer it to them and they refuse or they have a reason why they can't do it, you can now report that, and that will allow the state to adjudicate their availability on the claims. Remember, that was one of the 5 criteria that someone has to be available for work. So if you have an in-home care worker and their job is over, and maybe they file a claim and it's a legitimate claim, it's lack of work, assignment is over, they've been collecting for a couple weeks, and then a new assignment comes up, and you reach out and you offer them this assignment, and they say, I'd love to take that assignment, but my family and I actually have a vacation to Germany planned. So I'm unable to start on that date, right? That then, now the claim has already been processed and they're already paying this person. Well, the state doesn't know that they just said, I'm unavailable for work these weeks. So you would need to then subsequently offer that information. So you're a member of our services, the Shield portal where you fill out the claims. On the left side menu, you'll see a link that says, do you have a refusal of work to report or something like that? I don't remember the exact wording, but it's, do you need to report a refusal of work? That is a really nice, easy way when there's no active claim right now because you've already submitted the active claim, to later go in and click that link and just fill out the questions and hit submit. And then our claims administrator, Thomas and Company, will reach out to the state and will file a protest on your behalf, letting the state know that, hey, we want to question the availability. So I used the word protest, but let me retract that. It's not really a protest. It's questioning availability. So the only issue that's considered between the employer, that the employer has a say in, I guess you will, is the separation. Okay. When it comes to all those other things like monetary eligibility and availability and being able, physically able, those are issues between the claimant and the state. However, you as the employer can raise issues or questions about those things, and about their eligibility based on those things. You usually won't get a decision if it's something like that because it's between the claimant and the state, but that will force the state to ask the claimant why they refuse the work. And if they don't have a good reason, then the state will disqualify them and they'll just stop collecting, right? So just make sure that you're keeping track of those things and that you are reporting those work refusals, because that's the best strategy. So again, tips and strategies for lack of work claims. Regular part-time can be protested. That separation can be protested because, if they have the same schedule every week and nothing has changed and now all of a sudden they're filing unemployment, you have a right to be like, look, this is what we agreed to. This is what they work. Now, there are some states that won't provide relief and it'll work the same way as the other one. Like if they lost their other primary employer, you could end up then with a piece. There's a few that do it that way. But again, if you just could offer them more hours or something of that nature, that will take care of that. But if you want to be able to protest part-time, make sure you're providing set schedule and set hours, no fluctuations, right? In general. Also, have in the back of your mind, like, did the claimant request part-time? Like, do they have restrictions? Did they tell you I can only work Monday, Wednesdays, and Fridays, right? If they want to change their schedule, get it in writing, because you wouldn't believe how many people go to the employer and say, hey, I'm going to be taking this class, to further my education. And so I'm not going to be available to work on Thursdays anymore. And then they turn around and file an unemployment claim. So make sure you get those in writing so that you can say, oh, no, the claimant restricted their availability. We did not reduce their hours. The thing about questioning availability, and kind of already touched on this, is, the question to ask yourself is the claimant accepting all available hours or work? If the answer is yes, and it's a lack of work claim, there's probably not a lot you can do about it. But if they're not accepting all hours available to them, make sure that you report those refusals to the state. Again, if they've changed their availability, make sure you get that in writing. And another strategy is to offer hours and assignments to those who have filed claims first. So like temporary staffing agencies, right? They get a ton of unemployment claims because they have people going in and out of work all the time. So, when that person originally files, a lot of times the answer is, well, assignment was completed and it's a legitimate claim. They hit submit, the claim's gone. And now this person's collecting unemployment. And but then maybe some new assignments come up. um, Before you offer to someone else, look at who filed for unemployment recently. Go to those people first to offer those assignments and hopefully get them back to work. Or if they refuse it, you can report it. So again, sort of use your unemployment list as like a recall roster, right? Offer work to them first. Another strategy is, again, it's about your specific state rules, but summer camp employees, lots of states have uh, a provision that says if it meets these requirements, they're not eligible for unemployment. So I know a lot of our members run summer camps. Okay. So if you hire full-time students, you employ them less than 13 weeks a year, and your camp operates for less than 7 months a year, and you're in at least one of these states. There could be other states. These are the ones that we know about because we're not payroll experts. But these are the ones that we know for sure where it's not considered covered wages. So what that means is if you're in one of these states, maybe some others, and you have employees that meet this requirement, make sure that your payroll company is not listing these folks' wages on your quarterly wage filings to the state. Because what happens is when someone separates after a temporary assignment, like a summer camp, if they file for unemployment, they're going to be eligible and you're going to be liable if they have wages reported against you. But in these states, these folks are not considered covered wages per the payroll rules. So you should actually exclude them from those reports. So if they go and file, the state won't even find you. They may send you a last employer claim because you're the most recent person they worked for, and you're going to say assignment completed. And so the state might say, okay, based on that separation, they're eligible, but you're not going to have any liability because you have no wages reported in the base period. So know your payroll rules for your states, what's considered covered employment versus what's not considered covered employment. ChatGPT can help you figure out what's covered employment, what's not covered employment, but just make sure if it's not covered, because like we've had lots of members who have made mistakes on this, like AmeriCorps employees. They're not covered. It's not covered wages. And a lot of times they will accidentally be reporting their wages as covered wages, and then they start paying unemployment and they don't understand why. So make sure you understand covered employment versus not covered employment. The other thing about hiring full-time students, even if you're not in one of these states, if you have a summer camp and you hire full-time students that are home for the summer, when they leave or when the summer's over, they're going to go back to school and they're going to be a full-time student. And full-time students are generally not eligible for unemployment. So that's just another strategy. Even if you're not in one of these states, hire full-time students for those positions if you can. Another thing, another strategy, if you will, for lack of work claims is severance. Just know the rules in your state. How severance is paid can make a difference depending on the state, whether it's allocated out, assigned to a certain number of weeks, whether it's just a lump sum one-time payment. Um, and also, does your state consider severance to be covered wages? Because again, if it's not covered wages, make sure you don't report it. That could extend your liability on the claim or give you more liability down the line if you report those wages when they shouldn't be. And someone could qualify later based on those severance wages. And so if you're in a state, it's again very state specific, uh, look and see if severance is considered covered wages for the purposes of SUI or state unemployment. Um, and then last but not least, consider using reemployment services to reduce your liability. You guys are members of the 501c Agencies Trust. Included in your membership fees, you have access to reemployment or outplacement services. So utilize those. If you have to lay people off, if you have to make some cuts, you can offer them reemployment packages. Not only does it make that process easier for that employee to find their next opportunity, it also gets them off unemployment quicker because they get back to work quicker. So it will save you some money and make the experience for that separating employee a little bit easier. All right, we only got like a minute left, but just some quick tips for unemployment hearings. First and foremost, I want to stress that as a member of our services, you have access to hearing representation. They can't attend the hearing without you because the state requires firsthand testimony or firsthand knowledge, but they will attend the hearing with you. They will participate with you. They will prep you. They will help answer, they will help with questioning. So we don't have to go through hearings a lot because they're going to prep you for each individual hearing. Make sure that you select that you would like a rep. It is, optional, of course. All you have to do is say you want one. There's no extra fee for that. They will go through all these things with you. They will explain to you why firsthand testimony is critical. Otherwise, it's considered hearsay, right? Whoever witnessed the situation or who was involved really needs to be participating in the hearing. Okay. The other tip is to, of course, remain calm, address only the facts, have a notebook handy or a piece of paper handy, because what's going to happen is you're each going to get turns to talk. The claimant could just be, just saying all kinds of things that are incorrect. It can really raise the blood pressure a little bit. It can cause people to get a little upset. Stay calm. Write down what you want to rebut. Don't interrupt them. Please don't interrupt. When they're done and you get an opportunity to speak, now you can go back and refer to your notes and rebut anything that was false or that you disagree with from the other person. That is super important. Always have a pen and paper handy. And then, of course, always offer a closing statement, because the back and forth, things get really muddied. Use the closing statement as an opportunity to restate your case and sort of net it out. And in that order we talked about earlier, right? Like if it's a discharge, here was the final incident. Here is why it broke our policy and why we feel there was misconduct. This person was aware of the policy and they had been warned several times previously, and thus we feel that there was misconduct and benefits should be denied. That's just like a brief version of something that you could do as a closing statement. Again, you and your representative can decide who's going to do that closing statement, whether it's going to be you or whether it's going to be them. But highly recommend taking that the advantage of doing that, because it really does sort of reframe everything and sort of unmuddy all the stuff that's been going back and forth during the hearing. All right, I know we're like out of time, but I'm going to check, see if there's any more questions. And amazingly enough, there are not, which is awesome. So if you do have questions, though, and you didn't feel comfortable asking it in a public setting, feel free to reach out to us. You know what? Let me go back to up here. Here is my contact info. And if you need to, feel free to reach out to me and ask about a particular scenario. Again, fill out the survey, and in about 24 hours later, we'll send you those codes for the education credits for SHRM and HRCI, so that you can get your continuing ed credits. All right, well, that wraps up my presentation. I hope that it was at least somewhat educational, that you learned something today, or if you were just here for the free credits, that's cool too. But I hope it wasn't too boring. And I highly recommend that if you have a state-specific question or an issue or something that we need to help you with, please reach out to us. That's what we're here for. All right, have a great rest of your day. Thanks for joining.